Hi, everyone. Welcome to a new episode. Today, we have a crypto tax pro that is going to give a whole bunch of insights for newcomers to crypto, experts alike, tips and tricks on what to expect for reporting your taxes for crypto, and ways that you can very easily alleviate maybe your tax responsibilities and keep a hold of more of your profits. So his name is Joe Reiben, and thank you for joining us, Joe.
Thank you very much. Pleasure to be here. So you're obviously a tax pro, and it's something that I think is a smart move for anyone, especially who's new to crypto and might not be familiar with all the ins and outs of the tax responsibilities that come with that. So just to get a little hint of, what are the benefits of hiring a tax professional versus using things like tax reporting software that many people are using? Sure. And I think the first thing is the familiarity with the industry. Where I started as a trader, I did have to report some of my trades. And I did learn how to not just shield it from the highest tax brackets, but also to report and be compliant while using things to my advantage, such as short-term versus long-term capital gains, holding trades for a year, understanding a starting basis for your trade and setting that in stone so that the tax calculations from that basis to when you sell, it can even reduce your income from other areas, other taxable areas like your normal job, if you do sell at a loss but still receive income. There are a lot of tips and tricks that we do use to kind of alleviate, like you were saying, that tax burden. TurboTax does a good job of walking you through a regular W-2 or 1099 tax return, plugging in numbers, plug and play, and asking you, very basic questions. However, it's not the same breadth or scope of really questioning or the answers that we can provide and the tax relief we can provide when you sit down with a tax professional. And like Heidi and Toby were saying, we take really good care of all our clients. If you have a question, we're always available via phone or email or even Zoom. And we're there to kind of walk you through those steps that you might miss, those home office deductions, those deductions for trips to conferences, things that are tangentially related to your trading. If you set up, GPUs, computers, any equipment you buy, things like that may be missed in the reporting, the regular TurboTax or programs such as that.
That's great.
Yeah. So what are some kind of practical ways that newcomers can maybe use to really mitigate their tax liabilities? Like, what are some really basic tips then that they can put in place right now?
Sure. Number one, I would say absolutely always, please have a good accountant that understands crypto and understands the industry. That is an invaluable service. It saves you a lot of time and money and a lot of heartache at the end of the year when you're trying to go through CV files for maybe, let's say, 5 or 6 exchanges you're on. Heck, even if you're on one exchange and you're a high volume trader and you have, hundreds or thousands of entries, get an accountant to flesh that out per token, per trade, things like that they can use to plug and play. I do have a friend who's developing a program that is going to probably come online 2021. It's called Whale Tax, and it will help you pulling different APIs from different exchanges and pulling the CVs from that and compiling it and amalgamating it by itself. So that's going to be a really useful tool I'm going to incorporate into my firm. Second of all, setting up an LLC, it's a very, very important step you can use if you want to be classified as a trader. It is something you can use to, have more write-offs. It's something you can use to have more deductions, and anything that, like I was saying, tangentially related to or directly related to trading, you can put under that. So typically people that aren't high volume traders and make, a few trades a year, maybe let's say 5, 10, 20 trades a year, are considered investors. An investor does not have the access as an individual to the write-offs that a company dedicated to trading does. So that is a big advantage that and something that I can help walk you through and set up for on your behalf, since I am also a business attorney, and we get that set up in such a way that it's cost efficient and cost effective, and it'll pay for itself within the first year. We also have a lot of insider knowledge, such as states such as Delaware, Wyoming. They were saying Florida with no state sales tax. There are good states to set up in where we can have that trading, alleviate the sales tax burden in the states, or alleviate the state tax burden across states, as well as crypto to crypto trades, such as Delaware and Wyoming, where those trades aren't taxed until you cash out the fiat.
That's cool. So what are actually going to the States? What are some of the like top 5 best and top 5 worst states to actually be a crypto trader?
So yeah, it's really akin to trading in any other market, although states such as Colorado, Wyoming, Delaware, like I was saying, and really even Florida are implementing, very crypto friendly bills and resolutions to alleviate that burden on that asset class and to innovate, to stimulate development of that asset class. I was fortunate enough to work on the 2018 blockchain bill in Colorado, and have very intimate knowledge of Wyoming as our neighbor, how they really pulled some of our work, and we collaborated with them to set them up. They were, of course, now they're a step ahead of us, smaller state, a lot easier to do with a smaller population, but they have a lot of tech companies coming in and establishing there because of those very friendly laws. On the other side of it, you have your typical high tax, high state tax states like California, like New York, like Illinois, places like Texas, like places that are huge cities, a lot of people to tax, and there aren't, maybe used to be innovation friendly, such as California, but people are seeing the benefits of moving their companies out. Look at Tesla, where they moved to Austin, and it really does go region by region, even within a state. Other parts of Texas are not as friendly as, let's say, Austin, which is a more liberal, more progressive area. So it really does matter where you establish, and you can save a lot of money, especially as a high volume trader, thousands a year.